What's good, y'all? How y'all doing? Get this off here. Ross back. Today it's gonna be a little bit of a different video. Today I'm going to talk about liquidity and then kind of the trade that I took today. And then how I took a small um loss in the trade. I did record it. I was about to upload it, but something wasn't working, so it is what it is. But I'm gonna upload this. But pretty much, um, so pretty much we're gonna talk about liquidity and how I use liquidity to my advantage. So for those who are like who don't not kind of new trading and who don't know like doesn't know what liquidity is, all liquidity is it's just these areas where I have these liquidity swings where you guys see like these relative highs, right? These relative equal highs, relative equal lows. All that right means it's just pretty much buyers and sellers they have their resting areas, their stop losses, right? Where where I guess sometimes you would say like the institutions will kind of target these areas of liquidity, basically saying like there's money that is left here that wants to be collected by the market. So the market is pretty much always hunting liquidity, right? So with that being said, you can't just be, oh, okay, well the market's always gonna hunt for liquidity, so I can just look for like, oh, well the nearest swing, previous swing high or previous swing low is that's not true because the market has a draw on liquidity, right? So the market has a it likes to trend, right? So when we're like in a bearish market or a bullish market, right? So if we look at the daily really quickly, uh, excuse me, the daily has been bearish as we can see. So look, got some bearish order flow all coming down right here. All right. So meaning if you look at the higher time frame, these are relative equal lows, right? This is areas where liquidity is resting that the market wants to target, right? When we're in a bearish market or a bullish market, we're gonna target areas of liquidity, right? When the market's trying to like, shifts upwards, then we're just gonna target areas of liquidity that is higher, right? So every time, especially when you look on the higher time frame, every time when you see these wicks on the higher time frame of the candles, this is all basically liquidity, right? These are basically orders, because you remember institutions, they can't fill all their orders in just like, one trade, right? So what institutions like to do, what they like, what I've been like, been learning and like seeing really a lot, like the orders that are unfilled, right? Depending on like where we are, where the market is trending. If we're like in a bullish market, let's just say eventually start to look a little more bullish, right? My draws would be towards this imbalance and towards this liquidity, right? These wicks represent as relative equal highs, letting us know that it's liquidity, money that's just being left behind, right? So, you know, you consider this, like buy side liquidity. So, buy side liquidity, and that's just money that's just resting below highs. Sell side liquidity is orders and just money resting below these lows, right? So every single time when we see this, right, we all already assume, okay, price is going to go to one and two of these areas, right? You just have to know when price is going to want to go to these areas, right? You can't just assume it's going to automatically come here because it's sell side liquidity resting, right? You know, and sometimes it's cool. Um, so I guess, at least you can see that, but just don't assume, don't ever assume. You got to be able to just put other confluences together. Like my favorite thing to put together with liquidity is fair value gaps, because fair value gaps, price is always going to draw towards these imbalances eventually, you know what I'm saying? So if we're in like, if we continue on this bullish order flow, right, and we inverse this daily imbalance, right, then my draw will most likely be to this imbalance, be up to here, maybe up to here, but definitely up to this imbalance if we start getting some momentum and we look to inverse this, right? If not, if we reject off of this, then my draw will be down here to this lower level, right? So that will be my daily draw and stuff, you know what I'm saying? So I'm gonna break down the trade that I took today, and I just want to show you guys how I use liquidity coming into the market. So I was long biased 100%. I was 100% long biased. Um, I took a previous trade today. I'd have to go like to the video, whatever. Pretty much something like the same setup, whatever. Um, I think I took it around. Oh, I think I took it on NQ. That's why it's looking different. I think I took it on here. Wait, I have to go find it. Let me see really fast. It was around like 950 something like that. Okay. All right. So this was the first trade that I took. I got stopped out, right? But I kept my risk low. I moved my like once we got up to here, I didn't go full break even just yet, but I moved my stop up to relatively like relative profits, right? But so boom, this is what I was looking for. All right, so my bias was long. You guys, if you look at my other videos, you guys should know how I get my bias. So I'm not gonna break down that whole thing again. But um, bias was long, right? It's looking long. Um, at first I was like coming in with short bias because we were just trading in between both of these gaps. Then eventually we broke through this gap. So um, yeah, eventually broke through this gap and everything was all good, right? So I took the long position here. Once we got up to like around this range, I pretty much uh put like I pretty much yeah, made my profits like really smaller. I mean my risk I lowered my risk a lot. It was like to here. Then I put it to like there halfway, something like this. Then if, ended up getting stopped out. Especially when I seen this get inverse, I was like, okay, we gotta change the state delivery prices possibly looking to see lower. Right? But like my semi overall trend overall was bullish, right? Didn't want to see this inversed. I mean, no, I wanted to see this gap get inversed. It got inversed, and then we traded tap back into this inversion, and it just went lower. So all right, boom. First little loss, right? So as you can, this little right here is pretty much like the same entry that I had over there on yes, but NQ just was really choppy. We couldn't get any fair value gaps for real. Like there was just so bad. Like so, I just like you know what? Let's compare. ES to me was the better index. So if we go back to ES, right? So back to ES, right? So knowing that my bias is bullish, what did I want to see? First thing I wanted to see was some displacement higher, placing the SMT with ES, right? So we displaced higher, placing the SMT with ES. And then keep in mind, I am using other time frame confluences and stuff, but I'm not gonna like go back deep into that, right? So my first thing, this gap here, respect to here, right? Had this get we had this gap inversed, boom. As soon as we inverse this gap, right, right here, this was my change in state of delivery CSID. So whereas where I expected price to want to where I expected price to want to push higher, right? Which had change in state of delivery here. I was aligning this 1 minute with the 5 minute as well. Um, so right, so we had that change in state of delivery, and then I expected us to go up higher, right? And we did go up higher. So where is it? This here is it right here. This was gonna be my change in state of delivery right there, and then we went up higher. Oh wait, no, it wasn't that high. It was somewhere around here. I'm gonna stick to the 1 minute because that's where I took the entry and I know what I'm looking at. So, but yeah, right here, created imbalance, waited to pull back to the imbalance, one contract, and then one break even somewhere like here, break even, and then boom, ran through that easily. Um, I mean, I would have I could have seeked more, but I only, I've been trading just with one mini contract. Um, so yeah, I just traded with one mini contract, and that's exactly that. That was the trade. Just took the small little loss, and then made it all back and then a lot more. So today was like 600 plus day, so it was really good. I'm really happy. So yesterday, yesterday was something. Was yesterday a win? Well, I'm not sure, but I have to look back at my trade report. But I've been doing fairly well this week. Like nothing crazy, been risking well. The biggest loss that I had was like $200 and some change, I think, on this combine so far. So I haven't been risking any crazy amounts. I've just been sticking to my plan because I'm gonna be locked in, and I'm just trying to, 19-year-old day trader, just trying to get somewhere for real, and you know, get to the point to where I'm just really satisfied with my trading, and other things will come. So but yeah, so that is just pretty much the video on liquidity. Um, it's like one of the best things I say to pair with trading because price is always going to hunt for liquidity. Price is always going to go where the money's at. It's never not going to hunt for liquidity. So this was a good gap. Kind of poses like a breakaway gap. But I knew we were going to go up higher. And like I said, I knew the draw was higher. We just wanted to trade into this imbalance. And that was it for me. So yeah, I hope you guys enjoyed this video. I hope this video, helped you guys out a lot. And, I'll see you guys soon in the next one.